Hey guys, welcome to BLONITY. First, my little disclaimer. The following content is not financial advice. All content is based on my own opinion and estimates. My estimates could be completely wrong. Don't trust. Always do your own research and verify. Understand the numbers and be aware of scammers. And you know the best how to invest your money. Please be aware that I'm invested in a lot of mining companies. Okay, let's jump right into it. I want to talk about the Galaxy Digital Bitcoin Mining Research Report about 2021, Bitcoin mining's big year, and where Bitcoin mining is going in 2022. I think there is some interesting stuff in there. These are the two authors from Galaxy Digital Research and Galaxy Digital Mining, Karim Helmi and Brandon Bailey. Thanks for publishing this for sure. Of course, there are disclaimers. It's just for informational purposes and so on. So there's nothing for certain in this industry. We know this. But let's dive into it. So first of all, Bitcoin mining 2021 was big. We have seen a huge hash rate growth. We have seen a lot of Bitcoin mining companies coming to the exchanges and being a publicly traded company. And we can see the hash rate was rising here since January 2021. Then we had the big China exodus, the mining ban there. The network hash rate crashed by 50%. But since then we recovered and we're now at new all-time highs. So this is, maybe 2 weeks old or so, 3 weeks, I don't know. So we're now above these highs here. Not with the Bitcoin price, sadly. We have here the rig prices for the whole year. So when you're buying a new mining machine on the spot market, like as a retail investor, you buy like 1 or 5 machines or so. I think these are the prices for the most efficient mining machines under 38 joule per terahash. So this is the S19, for example, or the Watts miner, the M30 series, and so on. They are approximately at these levels, or the best Canaan miner. Of course, we have now a new generation miner. I would say this is the S19 XP with 140 terahash and with 21 joule per terahash, 21.5. So that's maybe, again, another category which would be even more expensive here. But this is not on the market. Companies like Mara or Riot, for example, or Bitfarms, they ordered some miners, but they're not installed. So let's see what happens there. But the price per terahash, US dollar per terahash, is above $100. And when we remember what the miner companies were paying, I think this price per terahash is very important. So for example, Hut 8 bought last year somewhere at $44 per terahash for latest generation miners. So for these miners, so the real price was below here. And I think the other companies also bought somewhere at $50, some even below. I remember Mara buying at $80 per terahash with the S19 XP. So a big tranche of 10 exahash or so at $80. So that was more expensive than the other buys. But again, this is a new miner. It is more efficient and we cannot compare it. The other buys from Mara were, I think, way below $50 per terahash. And the interesting thing is, like, over 68 joule per terahash. I think the S9, the old S9 miner, is like at 100 joule per terahash. So maybe this one here, it's $25 per terahash. I think the prices should come down again here for all these miners because Bitcoin price is down and hash rate is going up. So the hash price is going down, and that's how the miners are priced. I think approximately with a 1-year ROI or even below for the big mining companies when you buy big tranches. So the big Bitcoin mining ecosystem map, so it has grown a lot. I remember 4 or 5 years ago when I started to invest in the first mining company, Hive Blockchain there, the first publicly traded. We have now a lot more. We have I think 23 now, publicly traded miners. Some are pending. Core Scientific is listed since 4 days. Rhodium is new. Griffin is still trying to get the merger done. So yeah, it should be more even now, maybe 25, 26. We have large companies that mine, like Fidelity, for example. We have private miners, Compute North, we know them. Yeah, and there are even more miners we don't know. ASIC manufacturers, also more, but we will see the charts later. It's right now all about Bitmain, I would say. Mining pools, also interesting, also a lot here. Service providers, financial service providers like Galaxy Digital, for example. Hosting providers, so Riot is a miner, self-miner and a hoster, also Core Scientific, for example. ASIC brokers, immersion mining here, suppliers. So yeah, a lot of companies here. They're in the mining space. Many of them are in the US. Okay, talking about the mining pools, we have seen the hash rate is exiting China. And with the mining pools, it is right now, most of them are still, as I'm aware of, operating in China. But like Foundry USA has grown big here. We can see they're becoming one of the biggest. Mara Pool, I think this is Mara Pool here, is also growing with the hash rate of Mara for sure. We have Luxor mining. So there are new mining pools coming in. And I think it's above 20% now in the US or so. And this will also rise when the hash rate grows in the US for sure. Public companies in the spotlight. We have heard a lot of news in 2021 for sure about mining companies. So yeah, there are 23 miners with pending listing. So we know that 2 or 3 already listed since then. So it should be like 18 to 20 miners now listed on the NASDAQ, which is big. 1 year ago, Q1 it was like 6. These were the Hive, the Hut 8, Bitfarms. No, they weren't even listed on the NASDAQ, I think, in Q1. They're listed in Q2. But okay, let's move on. I think the debt raised by miners, this is an interesting chart. In Q1 2021, it was close to 0. Q2 even lower. Q3 also nothing. And in Q4, they really started to raise big capital with debt, with different instruments like senior note, private placements, convertible notes, pipe financing, credit facility, MiFi and BTC-backed loans. Biggest one is convertible notes. I think Mara had this. I think also Argo did this. Not 100% sure. Maybe these were also senior notes from Argo. But I think Mara did these convertible notes. So yeah, it has grown from close to nothing to 2 billion within 1 quarter. Going to be interesting how this continues. The equity raised by miners. So we have here in Q1 like 700 million maybe from the miners. In Q2, below 500 million. Q3 was big again here, 1.5 billion, and Q4 it was only maybe 700 million. And on top of this we had this huge debt. So it seems like the miners started from shifting from Q3 to Q4, so to replace the equity raise by debt financing, because investors got angry about a lot of dilution, and maybe that's also a reason. Also, there were new instruments, new providers, for example, like this Bitcoin secured debt and things like this. So equity and debt raised by publicly traded miners. So we have them all here. Mara, 1.2 billion. Big part of this is debt, and the equity is like more than 400 million, which was raised. Cypher Mining, 400 million only raise. Iris Energy, Hut 8, and so on. So they raised big capital, but also they're starting big with debt. I think like an approach like Mara or so, like 50-50 or so, maybe that's the right approach here. Don't go all in on debt, because you never know when there's a bear market hitting, you may be caught with huge debt. But when you 100% raise capital, investors get diluted a lot. So I think a mix is the way going forward. Let's see how the miners are doing this. I think it's a lot easier to raise debt in a bull market than in a bear market. So yeah. Also, transparency is a lot improved. We now get these operational updates from even almost all of these publicly traded miners. What did a Bitcoin produced? Of course, we have the financials. What is the exahash? I think that's very important. When we go to the ASICs manufacturers, you can see it is for 2022, the orders, it is all Bitmain. Yeah, from my top 10 miners I'm following, I just calculated, they ordered like 50 to 60 exahash. So yeah, that fits into this one. Bitmain like 55 exahash. So that's a lot of machines. Let's say it's all S19 Pro. That should be like 600,000 machines for 2022. Then interesting is that it's more Canaan miners than the Watts miner. So it seems like MicroBT was not able to secure enough space at the chip manufacturers. New generation Bitfury machines, more than 10 exahash. This is also interesting. They were always talking about the 5 nanometer chip. I have to do some research whether they have disclosed it or not. Yeah, and here we can also see that the S19 XP series, with like 18 exahash. So this is on top here for the Bitmain orders. So Bitmain is more than 80 exahash they want to deliver. So yeah, that should be 700,000 miners or so, mining machines. Wow, that's a lot. And we have Canaan here with the Avalanche series, like 18, 17 exahash. Also big orders here placed. Yes, we can see IPOs or SPACs, mergers here. So there are different ways to get publicly traded companies, and we have seen it latest with Core Scientific. They did this SPAC with they merged with XPDI, and they're now publicly traded. ESG was also a big topic, especially in the first half of the year, but all the companies are starting now to focus on this ESG stuff, which basically is it's about energy. It's about the E in ESG, and it's about renewable energy or carbon neutral energy, they call it. And since then, we have the Bitcoin Mining Council started by Michael Saylor and a few other mining companies, and I think they represent right now 50% of the network. Of course, this is not a centralization of mining. It's more providing data together, because the enemies of Bitcoin, they're always very coordinated in throwing FUD on us with like energy and carbon and things like this. And we had no data. And I think with Bitcoin Mining Council, we have some data to show that it's not all coal mining or something like this. I think a mix is good. The future of Bitcoin mining. What is very interesting here, the Hashrate distribution by hardware type. So this should be the latest hardware here, other hardware like the S19, S17s, the MicroBTs, M30s, and so on. But from this chart here, it looks like 25% of the total network are still S9 end miners. So the S9 was released in May 2016 by Bitmain, so it's more than 5 years old now. And it's still 25% of the network. So that is just insane. And yeah, in 2019 it was more than 50 or 60% of the network. So this is still one of the big parts of the network. And yeah, I calculated with like these 14 terahash per miner. So if these are 40 exahash here, there should be like 2.8 million machines still online from this S9 miner. So that's still a lot of mining machines here. So I think that's interesting. Also, we have seen the miner efficiency by the machines has gone down, has gone up tremendously. So they're more efficient in joule per terahash. Again, the latest one, the best one, is the S19 XP, which is not cheap, of course. But they're at 21.5 joule per terahash. That is the best, as I'm aware of right now. We have the mining profitability, or others call it hash price. So what do you get as a miner per terahash and revenue per day in US dollars? So we have been at the 40 cents per day per terahash when the times were good. Now we're down. We're even below the 20 here, 20 cents. So I think we're now at 17 cents per day per terahash, something like this. Yeah, of course we need a rising Bitcoin price to recover here. A very interesting number for me is for my forecast calculations, what is going to happen with the mining companies in terms of what is the mining share in the future. So Galaxy calculated a band for the hash rate growth in 2022 at the end of the year to 300 to 370 exahash. And the middle is 335 exahash. This is the number I'm calculating right now. So that would add right now like 150 exahash to the network, which is of course big. We have to see whether this plays out. It's a lot about supply chain, and can Bitmain, of course, deliver. And maybe also the market. If the hash price keeps going down, this could be also delay some deliveries. The average margin cost of production is like $11,000. I think that's like the electricity price, the electricity cost. On an average direct cost of production of 90,500. So this is, I think, with labor and other stuff related to Bitcoin mining. Maybe also depreciation, I'm not sure, but I think more its depreciation is included here. And an average total cost of production of close to $30,000 with all the G&A and the depreciation and all these things. So that's the total cost. I think for the Bitcoin price in the past, I think the direct cost of mining Bitcoin was more or less like the floor for the Bitcoin price, because when the miners drop below this, they stop mining. When they're here in this range or below, they still mine because they have the G&A costs, even if they mine or if they're not mine. But if they drop below this, it makes no sense to mine anymore, so they stop mining. So in the past, this has provided some floor for the Bitcoin price, but we will see. So I think that was interesting. Hope you like it. There are also other interesting reports from Luxor Mining and Viridi funds and things like this I will cover soon. So nothing is guaranteed for sure, but thank you very much for watching and see you in the next one. Auf Wiedersehen.